Showed something like the UVXY, yeah, 90 down to 43, right? You have to remember something. These things are designed to go down. Every trader should have these in the arsenal. This is just, they are designed, by design, are going to trade lower over time. And whether you've ever talked to a clearing company or taking a licensing exam, these things defy the rule about short selling that shorts can go against you forever. And the theory with stocks is we don't know. That company could take over the world and keep going up and up and up. However, these things are different because they are designed to deteriorate versus even the VIX, which they completely underperform. But they defy that. In order for these things to stop deteriorating, the market would have to go to zero and never trade again. And so as long as that doesn't happen, I want to have that. And I'm not saying these things can't rally, right? But over time, they're to deteriorate. So when you look at the VXX, and they all look alike, look at this. They deteriorate. And so anytime if you look at the VIXY, so you want to look for the market stabilizes or the market goes up, and these things will decline over time. And that's just how it is. If we take a look at the longer term VIX, I'll show you what I mean. If you take a look at this chart, here's the VIX. And you can see going back to 95, and we had our big spike, and the market's falling apart. But because of the mechanics of the VIX, you're going to have pretty much a reversion to the mean around 20 over time. And the reason being there is that it can spike, and I'm not saying that it can't do that for in a bear market for a while, but even in a bear market, the volatility dries up. So the market might drop significantly to spike the VIX, but once it stabilizes at those lower levels, it doesn't have to rally that much to bring the VIX back in towards the mean. Now that is not the case if we go to something like the UVXY. So if you saw that, let's bring this back for you here real quick. You can see this here since 2000. Here you can go, here's 30, right? And you go back here and it's like, okay, it's at 20 and it's at 30 and it's down to 10 and it's up to 70 and it's back down to 20 and right in here. If you take a look at something like the UVXY, UVXY monthly, since inception, there we go, split adjusted 24,000 down to 43. That's my kind of short. Like I said, these things are just designed to do that. And if we take a look here, and I've said this before in the TVIX prospectus, this is in the prospectus of the TVIX, and you can feel free to read along, or I'm going to read it out loud for you. The ETNs, and in particular 2 times long ETNs, are intended to be trading tools for sophisticated investors to manage daily trading risk. And by sophisticated investors, that's a polite way of saying idiots. Okay, they are designed to achieve their stated objectives on a daily basis, but their performance over longer periods of time can differ significantly from their stated daily objectives. The ETNs are riskier than securities and have intermediate or long-term investment objectives and may not be suitable for investors who plan to hold them for longer than 1 day. Accordingly, the ETNs should be purchased only by knowledgeable investors, once again, nice phrasing for idiots, who understand the potential consequences of investing in volatility indices and seeking inverse or leveraged investment results as applicable. Investors should actively and frequently monitor their investments in the ETNs, even intraday. As explained in risk factors in this pricing supplement, because of the way in which the underlying indices are calculated, the amount payable at maturity or upon redemption or acceleration is likely to be less than the initial principal amount of the ETNs, and you are likely to lose part or all of your initial investment. In almost any potential scenario, the closing indicative value, as defined below, of your ETN is likely to be close to zero after 20 years, and where you do not intend or expect any investor to hold the ETNs from inception to maturity. That, my friends, is my kind of short. Why are you going to try and think about doing anything else but looking for a sell signal and something that is telling you that it's going to zero? I'm sorry, likely to go to zero. It's the perfect. It's really that these products are, it's almost criminal that they're allowed to trade. But if you're a day trader and don't know this and are not taking advantage of this, you're really doing things the hard way. because this is a staple in the black traders trading and should be, for everyone. Another example would be if you take a look at, I'm not saying they can't rally, but if you ever seen one of these guys here where you get the contest of trying to ride the motorcycle up the mountain, right? And you'd be like, I'm not going to bet against him yet, but as soon as I see that top tire start to flip over his head, I'm betting against him, right? That then the motorcycle just goes, right? It's the same thing. You don't have to bet on him against him until he stalls out. And so, every time you see a stabilized market or a buy signal in the market, all you want to do is look for sell signs on these things because they deteriorate even more than the VIX ever will by design. And they're telling you, please don't do that. Please don't buy it unless you're sophisticated enough to know that you can hold this thing for as long as you can hold your breath. And if you really know what you're doing, you just ignore the buy signals because you know eventually that motorcycle is going to flip over that guy's head and fall apart because that is how they're designed. All right, so once again, I hope that helps. SPY right here for posterity. Here's 169.17, right triangle extendo. But in this move, when you see something like this, you remember you want to go after these VIX products. Don't always get in their way, but once they stop, they are designed to go down. Make sure this is in your trading arsenal. All right, everybody, I'm Rob Smith for Smiths in the Black at T3 Live.